I'm Sarah, a tutor at Accountancy Learning, and in this video I'll take you through the Tax Processes for Business AAT Sample Paper 2 Task 4 based on Finance Act 23. So this task is about preparing, calculating and adjusting information for VAT returns. Jazz is an accounting technician who works for a firm of accountants. Jazz is working on the VAT return for the Salt Design Company Limited for the quarter ending the 30th of September 2023. The Salt Design Company Limited use the cash accounting scheme and the VAT return is completed using a software package. Jazz has entered a payment to a supplier totalling £529 including VAT at a standard rate, as indicated on the invoice. The software has calculated the VAT as 88.20, whereas the supported invoice shows VAT as 25.20. Now remember, in your exam you can have this information up on the right hand side of your screen by looking in the references section so that you don't have to keep scrolling up and down as you answer the questions. Part A. Identify the reason for the difference by completing the following statements. So first of all, the invoice is, and we've got correct or incorrect. So the 529.20, that's our gross amount because it includes VAT. And it's at a standard rate. So what we can do is find out what our net value is by dividing it by 1.2. You can also divide by 120 if that's your preferred method. And then you can multiply it by 0.2, which will get our VAT rate. That equals 88.20. So now we've got the correct amount of VAT for that amount. We can see 88.20 was on the software and the invoice is 25.20. So therefore we can say the invoice is incorrect. It then says VAT has been included at the, and then we've got three options. So we can first of all discount our standard rate option because we know that the invoice is wrong, so we know it's not going to be standard rate. So let's have a look whether it would be the reduced rate. So we can do the same calculation, but this time we will divide it by 1.05 because our reduced rate of VAT is 5%. So either divide it by 105 or divide it by 1.05. And then we can times it by 5%. And that gives us 25.20, which then matches the amount that's on the invoice. We could also discount straight away a zero rate because if it was zero rated, then VAT would show as 0 on the invoice. But because we've got a VAT amount, we know that it couldn't be a 0 rated invoice. The next part then is identify one corrective action that Jazz should take. So should he change the figure in the software to agree with the invoice? Contact the Salt Design Company Limited to ask them to investigate with their supplier, or use the figure in the software and take no further action. So we definitely need to do something with this because there's an error. So we're certainly not going to be doing the bottom one. And we can't do the top one either because we shouldn't just be making figures agree. So we need to contact the Salt Design Company and ask them to investigate with their supplier. The next part then is the Salt Design Company Limited invoice a customer for £1,500 plus VAT at a standard rate on the 1st of August 2023. The customer paid for half of the invoice on the 15th of September 2023 and the remainder was still outstanding on the 30th of September 2023. The question now wants us to calculate the amount of output tax relating to the above transaction that will be included in the VAT return for the Salt Design Company Limited for the quarter ending 30th of September 2023. And we're told to enter our answer to the nearest whole pound. So before we just jump in and have it and start using standard rates and everything here, let's just go back to the information we were given at the start, because we're told that they are on the cash accounting scheme. With the cash accounting scheme, it means they don't pay over any output VAT until the cash has been received by customers. So because the customer paid for half of it on the 15th of September, that's the only amount that we need to pay to HMRC. So we can divide it by half, then work out our 20% to give us £150. That is the amount that we need to pay over to HMRC within this VAT return for the end of this quarter. The other half of it is still outstanding. So under cash accounting, we wouldn't pay that over yet. So the next part then is Jazz has noticed that the bank reconciliation for the Salt Design Company Limited was not completed for the previous quarter to the 30th of June 2023. He has identified 4 transactions that need to be posted in the accounting software. So we've got to calculate the changes that need to be made to the figures for output tax and input tax for each transaction. We're told to round down your answers to the nearest penny. If there's no change, enter 0.00 and ensure you enter a figure into every box. So in order to pick up full marks for this question, we need to make sure that there's something in each of these boxes. So the first one, payment to a supplier totaling £90.24. The supporting documentation shows VAT at a standard rate. So as it's a payment to a supplier, it means we've obviously bought something of some description. So therefore it's going to be input tax that's going to be affected. So £90.24 is our gross amount. That's the amount that's left the bank. It's at a standard rate. So we can work out the VAT amount that needs to be adjusted for, which is 1504. So we need to put 1504 in here. And remember, we need to put 0.00 in any of the empty boxes. The next one, amount paid to HMRC for VAT for the quarter ending 31st of March 2023, £3,868.71. This is an amount paid to HMRC, so this is now not going to affect output or input VAT at all. This is simply a payment that's been made to HMRC. So this isn't going to have any effect on the input or output taxes. So in both boxes, we will put 0.00. The third one, proceeds from the sale of a computer for £300. The Salt Design Company Limited had claimed input VAT on the original purchase. So they are going to have charged VAT on the sale of this computer. So they're still going to be liable to pay that VAT over to HMRC as normal. So that's going to affect our output tax. So again, we would do our calculation to find our VAT. And this time it'll be in our output column. And therefore we put 0.00 for our input to make sure we've got our box covered. Then finally, a direct debit for the payment of electricity for £262.50. The supporting documentation shows VAT at 5%. So this is going to be effectively, it's the payment for electricity. So it's the electricity that we're using. So therefore it's going to affect our input tax. So we're going to do the same calculation, except we need to remember that we've got VAT at 5% now. So we're going to divide by 1.05 and then times it by your 5%, which comes out at 12.50. So this will be input VAT and fill in our last box to complete the question.